Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is a series where we decode and analyze Nifty on multiple time frames and create a trade plan so that we can handle the markets the next day with much more confidence and clarity. And while we are doing so, we also learn and focus on key price action strategies as well as price action points that are essential to look for when you are trading in the live markets. Right. Tomorrow evening, the video on investing and how you should plan your investing journey and how you should keep on monitoring it will be live at 4 p.m. So anybody who has not yet subscribed to the channel, please hit the subscribe button so that you get a notification when that video is live. That is gonna be one of the most important videos that I believe will ever be posted on this particular channel. And do not forget to hit the like button, subscribe to the channel, share it with the trading friends and community, as well as put down anything that you might have to say in the comments box, be it words of appreciation, words of criticism, any feedback that might be there in your mind. Please do not hesitate to put it down in the comment box. I am open to everything. On that note, let's start with today's video. I had posted the expiry special video yesterday, the monthly expiry special. And if anybody has not watched that particular video, please go back and watch because I had shared a very important strategy or a trade setup that I use, especially on expiry days, which even played out today. I will share the details with you once we go through the trades of the day. Now, yesterday, what we had planned was that we'll be looking at creating a long above this particular high, short below this, uh, along with above this particular high, we're looking for a long with a pullback. And this was the trend line that we had drawn from a daily time frame. And above which I had suggested that in case if market goes up above this, we'll be looking at adding quantities. Right now, markets opened with a minor gap up. Now, this is what I call a good gap up. Market opened above our zone above which we were looking at long. But did we get a pullback? Nope. We did not get a pullback till around market gave us a closing above this particular high, post which market gave us a pullback, and then I also broke that particular high. Now, this is a trade which, although we had planned, I am sure if you would have been following my videos consistently, this is a this particular entry above the high of this particular candle with the valid pullback above our zone is something which we should not take, right? Even though we had discussed it, this is something that we should not take. The reason Nifty has already moved up quite a bit, and to continue this journey for another with the same momentum as this particular price point and without reversing and giving us a good profit, the probability of that is very, very less. So we also need to look at where is the price action coming from, and do we still have enough room on the upside? Now, although yeah, prices have moved up quite a lot, and that can happen, that could have happened directly from here as well. But these are certain trades that I refrain from taking, right? Because the probability is very, very low. Now, trading is all about probabilities, and you should weigh in when you are planning your entry. You should weigh in what is the probability of this particular trade being a successful trade. Anything above 60-70%, be my guest. Please take that entry. But this, as you can see, markets broke out in this particular candle, the 950 candle. And within the next two candles, it reversed and also broke this particular swing low. So anybody who would have taken a long around here would have been trapped, right? Now, this is something which I had clearly mentioned that if we are creating a entry around here, this is a place where we can look at adding positions, right? So but we did not get any sufficient or a good enough pullback around here, above which in case if market would have given us some pullback candles around here and then would have broken the high, we could have entered the trade. And again, around here, we could have taken a additional quantities around here, right? So that was the plan, not entirely too long above this particular high. And why is that? Because if we were already in a position which is in profit, we can still add on to the positions. And in case of a market reversal like this, we could have easily gotten out with some gains, right? But if you're planning a fresh entry around here, that is something which is not suggested. I hope I am able to make that point very, very clear. We also need to see where we are coming from before entering into trades. Now, post this particular trade, uh, there was a short trade which was around here, but then again, this was the double top which had formed, but then again, it was not quite convincing, and I did not take this trade as well. Post this trade, market was in a sideways range, broke out around here. Again, I did not take this trade. I was waiting for some good uh, confirmation on the price action part, and then I saw this particular triangle consolidation, and finally prices broke out on the upside, gave us a very good pullback, and this was the entry that I had taken on the 145 candle around here with good momentum. I got out on this particular candle, even though after this markets did go up again much higher, but this is the place where I exited from this particular trade. It was a decent trade. I'll not call it a great trade, but it was a decent trade. And now we'll come to the second part of the trade, wherein I had spoken about. So this particular trade that I had taken, this was in the 3rd of July expiry, which is next Thursday. And as I told, on expiry days, I especially look for a setup basically in the same expiry, that is in today's expiry, and that is based on the open interest profile, right? I'm just gonna be sharing the open interest. I had taken screenshots. So this is what exactly I look at, right? So this is the open interest, which was at 303, it was 2.82 CR, and on the put side. And so basically people had added put writing, which is the support was increasing, whereas people were exiting from the calls. And if you can also see the hero zero trade that I had also taken in the 25,000, this is the, sorry. So this is the chart of the 25,500 call option, 25,500 call option of the June expiry on a 5 minutes time frame. And if you can see, the prices from around 20 went up to 50. Now, this is a particular trade setup which I am willing to risk a little bit of the profits that I have earned throughout the week. And in case if I observe something like this, in case if I see people there is a good concentration, right? So call OI at 2:57 p.m. 1.95 CR. I had actually taken the entry before that. This is just for a screenshot reference that I had taken, that this is what exactly I look at. People with 74.2 lakhs, minus 74.2 lakhs, people had exited their contracts, right? Not exactly 74.2 lakh people, but 74.2 quantities, 74.2 lakh quantities had been exited around between this particular time. And this is when you know, okay, people here are people who had written calls, right? People who had shorted the markets. That is why they had written the calls, and they are exiting. And what will they need to exit? They will be buying the call option that they had shorted, and that will lead to a short covering. And that is exactly what had happened in the market, right? So I hope I have been able to give a clear-cut example of what I had explained in yesterday's video versus how it played out in the market today. Now, for tomorrow, the plan of action will be very simple. Do not trade. I am expecting a sideways day, a consolidation day. If this is not a trap, and if we are going to continue higher up, today's candle is very, very good. We have finally broken out of the sideways range that we were trapped in with a very good bullish candle. We have broken out of this particular trend line also. The only thing that we need to look at here is this particular gap. So we have also entered the gap territory. Now, this is a gap on a daily time frame around 1st October and 3rd October, right? 1st and 3rd October. This is the gap which is pending. So I'll just keep you guys to keep a watch around. Market should spend some time around here and then fill the gap if it has to, right? Keep an eye on this particular gap. I'll be removing this from my chart. It has already entered the gap area, and I am expecting continuation on the market. So the trend that we were waiting for since a long time might finally be there. But for tomorrow, I will suggest to not trade, because what usually happens after such good trending days is a day or two of sideways price action, and that is some place where people mostly get stuck in the uh, wrong positions, and you give out their stop losses without any particular reason. Now, there can be one trade which I can plan. Now, markets are bullish. Do not uh, take anything negatively from here, but then this is a short trade which I am explaining. I have given multiple explanations to you guys in the past as well of similar setups which were on the short side. Market has rallied in a good momentum in one direction. Now, there will be people who would have taken long positions overnight, carried overnight long positions. And what I want tomorrow for this particular setup, now this particular setup can only work if we are opening flat. We are going up above this particular uh, today's high. We are closing with a good red bullish candle. That would signal more people have entered the trades. And once the low of this candle gets taken out, we can plan for a short trade. We don't even need a pullback around here because if, sorry, we don't even need to wait for a pullback around here. We just need to see once we are moving back below this particular candle, are we sustaining, right? In case if we are seeing the prices sustaining below the low of this particular candle, we can take a short trade. Now, this can only be happening if we are opening flat, a bullish candle, and then the low of that candle gets taken out. We can plan a short entry. Otherwise, honestly, I am expecting markets to be around this particular zone only to consolidate. But again, we cannot rule out a long entry because markets are bullish and markets can give us surprises. So we will be looking at this particular trade setup wherein we can look at continuation above this particular high as well. Now, on a higher time frame, if we use Fibonacci, we need to look at good levels of retracement. So I will simply be using the zero point 0.5 to 0.618 zone that we always look for, right? And we'll again shift to the lower time frame for the planning. So say, for example, market opens with a gap down. What we can also, for anything, overnight news, anything, market opens with a gap down, we can look for a positive price action around this point to again go long. I'll be deleting these lines. These are from yesterday's trade plan. I don't want them to disturb tomorrow's trade plan. And a short position, even if not today, not tomorrow, maybe Monday, but we are not looking to short Nifty until unless we are below this particular zone, right? This zone also marks the around almost very close to today's low. So that is something that we can keep an eye on. And yeah, this will be the short and crisp concise plan for tomorrow. But then my suggestion would be to try to avoid trading tomorrow because mostly it will be some trap setups which can be done. Nifty will be sideways without any momentum. And in that case, option buyers that I am an option buyer, it becomes very difficult to trade. And on days subsequent to trending days, that is a strategy that I use. I'll be very, very cautious in the market. And that is something which I will suggest to all of you as well. So that's it from my side for today. This is the plan for tomorrow. I hope you guys trade well and keep all these factors in running. And in case if you guys like the way I am putting out simple explanations, and I believe this is, I am trying to simplify trading for all of you. People unnecessarily complicate trading by using a lot of indicators, lot of other things, and then uh, they will put in too much of analysis and too much of thing, and then I believe too much of analysis leads to paralysis. And you should try to keep things very, very simple. Keep things plan things very, very simple. And once you are already planned and ready for the market, just simply try to look at how is the market reacting around your levels and then plan your entries, right? Not necessarily that, okay, prices have come here, then you'll blindly buy. No, we need prices to confirm, prices to give us some sign of bullishness around these levels. Only then can we take a long entry. For us, prices need to show us that they are, yes, they are trying to spend some time around below this particular low. And then this is fresh buyers who are being trapped and we can look for a short scalp, right? And again, these trades on the short side around here, if you are taking it, please take it with lower quantities and try to trail tight and try to book your profits also as quickly as you can. So yes, that's it from my side. The video on investing is dropping tomorrow. Do not forget to watch that. It's very, very important. And yeah, do not forget to like, comment, subscribe, share the channel with your other trading friends and communities that you are part of. This is your Nifty Guy signing off for today. I will see you guys again tomorrow in the investment video. Thank you so much, guys, for watching. Cheers.